Let me ask you a question. What would happen to your business and investment portfolio if you could download the exact decision making framework of a man who turned 100 million into 40 billion? Imagine having the power to spot opportunities others miss and avoid devastating pitfalls. Welcome to Dynasty Designers, and this is where we transform the world's most powerful business strategies into actionable blueprints for your success. And today we're delivering something that it could literally be worth millions to you. So, Chris Hohn, the private billionaire behind TCI Fund Management, has a jaw dropping 18% annual returns over 2 decades. While most people spend hours trying to decipher the full conversation and interview, I've done something different for you. I've extracted the 10 most immediate, applicable wealth building lessons from this interview. Lessons you can implement today and potentially triple your ability to identify truly exceptional business worth your time and capital, dramatically reduce your risk exposure while maximizing your upside potential, build ventures with such powerful competitive advantages that they become virtually indestructible, and make investment decisions with the same clarity and convictions that has potentially and can generate you billions of dollars in wealth. So you deserve these insights without wasting hours going through the full interview. These aren't academic theories. They're the exact mental models that consistently outperform the market through multiple crashes, recessions, and global crises. By the end of this podcast, you'll have a complete framework for evaluating businesses, investments that put you in the top 1% of the strategic thinkers. Let's begin with the first game changing insight from Chris' Extraordinary Playbook. And the first lesson is called the Fortress Business Blueprint. Build or buy businesses with moats. This strategy is about identifying and investing only in businesses protected by exceptionally high and sustainable barriers to entry. Forget fleeting growth or trendy new ventures. Focus on establishing or acquiring assets that are fundamentally difficult or impossible for competitors to substitute. And these modes can take many forms beyond just scale or network effects. Just a prime example of TCI's investment in Airport Spain. Chris Hohn highlight the airport are often irreplaceable physical assets and natural monopolies. He notes the extraordinary difficulty, if not impossibility, of building a second airport in major locations like Madrid due to planning hurdles, land availability, lack of economic rationale, and this inherent barrier ensures minimal competition, which Chris states is crucial because competition kills profits. Investing in such infrastructure is hard to compete with or replicate, and it aligns perfectly with the Fortress Business Blueprint. The second lesson is the essential needs empire. Anchor your business in a non discretionary demand. Instead of chasing volatile markets or consumer trends, this strategy focuses on providing products or services that are essential rather than discretionary. Businesses built on essential needs enjoy more predictable demand, even if the revenue streams aren't always smooth in the short term, providing a stable foundation less susceptible to economic whims. So, in TCI's long-term investment in rating agencies such as Moody's, it exemplifies this strategy. Chris explains while bond issuers can defer refinancing their debt in any given year, eventually the debt must be refinanced and therefore must be rated. This creates an essential need for rating agency services. Although there might be periods where financing activity slows, the fundamental requirement of ratings when debt matures ensures recurring, sometimes deferred. The inherent essentiality makes the rating agency business fundamentally more predictable in the long run than discretionary industries. Lesson number 3, unlocking hidden assets. See value beyond P&L statement. This strategy involves looking beyond simple earning multiples or standard financial metrics to find intrinsic value. In often overlooked or misunderstood assets, particularly irreplaceable physical assets or complex structures like regulated businesses with unregulated components, while many investors focus solely on earnings, finding value in intangible assets or dual till structures can reveal significant upside. Returning in the Aena investment, Chris points out that while airports have regulated aspects like changing landing charges, the non-landing charges, including revenues from shops, advertising, VIP lounges, and parking, are often unregulated. In Aena's case, this unregulated piece constituted a much larger portion of value, potentially 70% more. These unregulated operations have very low capital intensity and generate high returns on capital. Growing with increased travel demand, by analyzing this dual till structure and recognizing the hidden value in unregulated asset-like components, TCI saw potential beyond the regulated bond-like returns. Lesson number 4, the pricing power premium. Charge what you're worth, not just what volume allows. So a truly powerful business possesses the ability to price its products or services above rate of inflation. This isn't common, but when found, it's a potent driver of profit growth. Unlike volume growth, which often requires capital investment or faces competitive pressure, incremental pricing power directly translates to higher margins and disproportionately boosts profits, especially for business owner with lower margins. Identifying and investing in these rare super companies is key. So while not tied in a single specific example, Chris identifies aircraft engine manufacturers space he likes. He knows that there are only 2 players in the narrow body engines and 2 in a wide body, with no new entrants in over 50 years due to extreme complexity and material science involved. This duopoly structure, combined with critical nature of the product and install base creating a spare parts business mode, strongly suggests significant pricing power. Chris Hohn emphasized the ability to price 1% above inflation can make profits grow 5% faster than revenue for a company with 20% margin, highlighting the immense value of this often overlooked mode. All right, if you're enjoying this so far, we're halfway through. Subscribe if you haven't already. Lesson number 5, the patient owner principle. Invest for forever, not for tomorrow. He has a long-term thinking when it comes to his horizon. Adopt a long-term perspective, akin to private equity ownership, where you are prepared to hold an investment for many years, even decades. This allows you to ride out short-term market volatility and benefit from a compounding of a company's intrinsic value, which ultimately matters more than short-term stock price fluctuations or entry valuation multiples over a sufficiently long horizon. Chris states that TCI takes private equity approach where they have to hold the company forever because they may need to sell when the market's prices are poor. Their average holding period of their current portfolio is 8 years, but some investments have been held for 13 years and potentially holding period could be 10 to 20 years. He uses the example of Moody's, which TCI bought, sold, and bought back. He initially sold after doubling his money quickly, thinking he was clever, but the earnings kept compounding, demonstrating how intrinsic value growth over the long term can far outweigh short-term trading gains. This strategy requires the willingness and ability to hold for the long haul to extract that intrinsic value growth. Lesson number 6, the decisive dissident. Targeted activism as value protection. While advocating for constructive relationships, Be prepared to engage in targeted aggressive activism, including litigation or demanding votes. When companies' management makes decisions that severely threaten shareholder value, this activism is most effective when applied to fundamentally good businesses where management is acting detrimentally rather than trying to fix inherently bad ones. So, TCI's fight against Safran's proposed acquisition of Zodiac. Safran, a great aircraft engine company that TCI had held for 13 years, announced buying French aerospace company Zodiac for 10 billion in shares. TCI believed that prices was ridiculous and Safran shares were undervalued, meaning they were paying 4 to 5 times Zodiac intrinsic value. TCI launched on a very aggressive campaign, threatening litigation and demanding a shareholder vote. As Zodiac issues multiply profit warnings, TCI position was validated. This pressure forced Safran to renegotiate, cutting the price in half and paying in cash. Although it led to TCI being sued, the actions protected and significantly increased the value of their Safran holding. Chris Hohn frames this type of activism as fighting back when attacked as an owner. All right, if you enjoying this, hit the thumbs up button. All right, lesson number seven, the incumbency advantage. Leverage the power of existing ecosystem. Recognize that in certain industries, the power of incumbency, including an established installed base of users and high customer switching costs, creates a powerful moat that can fend off newer, potentially innovative competitors. Building an ecosystem where different products are bundled or integrated makes it extremely difficult and costly for customers to switch, providing a significant competitive advantage. So, Chris uses Microsoft as an example. He highlights their Office franchise bundling strategy, Word, Excel, email security, etc., which creates customer switching costs. When Zoom emerged as a competitor in video conferencing, Microsoft responded by launching Teams. They were able to distribute Teams through existing Office bundle for free, leveraging their massive installed base. Even if some people thought Zoom was a better product, Microsoft won the battle because it was good enough and readily available to their entrenched user base with high switching costs. They already had those users, so it's easy for them to integrate that particular product. All right, number 8, the intuitive navigator. Integrate knowing with analysis. While rigorous analysis is necessary, develop a trust to your intuition or knowing, a form of intelligence that goes beyond pure intellect and often involves pattern recognition redefined by experience. Use this intuition to guide fundamental decisions and assess subjective factors like trustworthiness, recognizing that analysis alone may not uncover everything, especially potential bad things. So Chris describes intuition as thinking without thinking, and a higher level of intelligence than just intellect. He admits his intuition has become stronger over the last 5 to 10 years with experience. He applies it to various aspects, including assessing people's trustworthiness and recognizing patterns. He explicitly states using intuition in his decision to start TCI, feeling intuitively he was in the wrong place. He also relates it to a major personal insight, like meeting his wife or understanding his philanthropic drive, a point where you just know. Although not a specific investment case study where intuition was the sole driver, he knows that the Wirecard fraud, while analyzed, was there in plain sight, hinting at an obviousness that might be perceived intuitively once the key red flags were identified through analysis. Number 9, the focus foundation. Foster trust and limit distractions in a small team. Build a small collegiate team based on deep trust and shared philosophy. Prioritize open-mindedness and ability to challenge ideas constructively. Crucially, focus the team's efforts on only the handful of things that truly matter for investment decisions, filtering out the vast majority of noise that doesn't. So Chris details TCI Investments team structure, which is intentionally kept very small, at around 7 or 8 people despite a large back office. This small size allows for a collegiate atmosphere where people have known each other for a long time and have built an intangible trust. He emphasizes that hiring decisions require the blessing of the senior team to protect this culture. In their process, they actively seek competing views, including from inherently bearish team members, to test the bear case and challenge potential disruptions like technology. This focused, trusting, small team dynamic allows them to concentrate on the critical fundamentals and avoid being overwhelmed by extraneous information. All right, now we are at the last lesson. I hope you have enjoyed it so far, and comment down below what is your favorite lesson. Number 10, the 10 and the final lesson, purpose-driven capital. Let service and philanthropy guide your wealth. Integrate a deep sense of purpose and service driven by internal soul urge into your financial activities. View generated wealth as not as an end in itself, but as a means to create positive impact, primarily through philanthropy. This fundamental drive can influence not only how profits are distributed, but potentially also the types of investments or activism pursued. So Chris explicitly states that he gives away everything he earns to charity. He managed through various means, including his foundation, which has assets about $6.5 billion, with hundreds of millions given away annually. He describes this drive as a soul urge for service, a core part of who we really are. The foundation's work focuses on high-impact areas like climate change, funding advocacy, technical assistance, and children's health in Africa and India. This demonstrates how powerful philanthropic mission, rooted in a personal sense of purpose, becomes a fundamental part of the overall financial and operational strategy, directing capital towards significant global change. Now, what would happen if you implemented just one of these strategies in your business or portfolio this week? What kind of compounding advantage might you create over the next 5 to 10 years by applying all of them? This is exactly the kind of actionable, high leverage I deliver every single week at Dynasty Designers. While others offer surface level business advice, we're obsessed, okay? The people that listen to this are obsessed and have the drive to get better. And what I would like you to do, if you haven't already, subscribe now to Dynasty Designers to ensure that you never miss this wealth building frameworks. Your future self will thank you for the decision you make right now to arm yourself with the strategic thinking of a proven dynasty builder. Remember, the difference between good and extraordinary results isn't just hard work. It's having superior mental models for making decisions. That's exactly what we deliver here every week. So I'll see you next time. And if you haven't already, hit that bell. Peace.